Welcome back. So I just finished a 1-hour session with members of my Outlook Annual looking at forecasts I made in February for the market ahead. I made these forecasts before we knew how the Russia and Ukraine situation would unfold, exactly what the timing of things would be, and the forecasts end up being still very helpful. So looking at the markets 2 weeks or so after I made the forecast, we also noticed that momentum in the form of what I call my bull-bear RSI face-off is really coming into play, especially across the index ETFs right now. So I wanted to share this with you, my tribe. So today's Tuesday, March 1st, 2022. Now, important reminder before we get to the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in my video. All right, so here we have charts of 4 index ETFs that I'm going to move through, and I've already highlighted the bull-bear RSI face-off. Now, what is the bull-bear RSI face-off? Well, you can find out more about that in my ebook I share on that, and many of you in my tribe have access to that. So what I've highlighted here is that disconnect between price and momentum that leads to that setup that warns you about potential price turn. The cool thing is that right now, when you combine in other aspects of my trading trifecta, my approach to price action, my way I handle forecasting, where I even teach you how to make money off missed forecasts, it really opens up possibilities for where we might go from here. So just starting with the SPY, right? There's resistance coming in off just a kind of a standard trend line. And you can see that we're just hugging this resistance. So while we had the liftoff from the bull-bear RSI face-off, the impact of that bullish approach may be kind of coming to its end. If we want to continue higher from current levels, we need to see clearance above this falling trend line. And when you look at the daily price action, but then go down a layer to the 60-minute chart, you can see even more. So I'm going to just do that with you right now. I'm going to just change the time frame of the chart in front of your eyes and then bring the price action over to the screen. Okay. So you can see that now that I have these items in place, I'm going to go and shift what the bull-bear RSI face-offs were. Now you can see here that there was a bull-bear RSI face-off here. However, this was a slightly more advanced approach. So if you are new to the RSI power zones, if you're new to trading momentum, whether it's a step out from the bull-bear RSI face-off to my basic education or to something more advanced, I have 2 routes. I have the 4 zones RSI coverage system, which is the best natural next step after the bull-bear RSI face-off. Or I have the advanced RSI power zone system. And that is where I teach the type of bull-bear face-off that's happening here, where it's on more of the minor trend. So what does this mean? Well, in this one, unlike the one from the daily chart here, the bears happen to be winning. And this sets us up for a situation where I'm expecting likely weakness in the days ahead. We've got to see how everything actually shakes out. And the best way to do that is to follow me along in my skinny and the mini research. But just kind of laying out where we are now, this is where I would come in and use my forecasting tools. And my forecasting tools are providing the following resulting analysis. So based on my simplest forecasting techniques, which I teach in the loss forecasting trading system, there's an expectation for the market to potentially weaken into March 4th, so essentially Friday. Now, how far down it's going to go, what to do if it gets to that target versus if it misses, I detail all of that in the loss forecasting trading system, the techniques to be able to do that. But I thought it'd be helpful for all of you out there to know that based on momentum, based on the daily chart, and now looking at the 60-minute chart, there's room to nudge lower, but we have a key timing point coming in March 4th. All right, so I'm going to take what I just did here and touch upon the other indexes so that you have similar analysis. So here we are on the daily chart of the Qs, and this is the index ETF relating to technology stocks. So here you can see also that we had a bull-bear RSI face-off recently, and in that one, the bulls happen to be winning. But are they going to be limited? Well, we have to see if there's any overhead resistance. So again, I'm going to see if there's any sort of useful trend line to take a look at. And yes, we're hugging a trend line here as well. So it's the exact same story as the SPY. Hugging a trend line that's providing resistance to the top side. So the effects of the bullish bull-bear RSI face-off may be over. But now we can take that to a 60-minute time frame and see here if there was a short-term bull-bear RSI face-off. So in the Qs, we didn't get the exact same setup as the SPY, but we did get the weakening from the bear resistance power zone. And this, to me, means that the Qs actually would have a lot more work to do to go to the downside than the SPY would. So if you think of it as like a who wore it better of bearish energy right now, the SPYs look a little bit more bearish than the Qs, okay? So let's look at the DIA. This is the index ETF for the Dow. Again, bull bear RSI face-off. You can dive into my ebook on that to know how that unfolds and to be able to identify it. But what I'm seeing here is that we actually don't have one of those trend lines close by. If we come back and draw a trend line off of the most recent price action here, we can see that it will extend out, but my suspicion is that it will not touch the recent price action, okay? So it wasn't quite as useful. This market is weaker still than what the SPY is showing, okay? And we could go to the 60-minute chart to see if there's a recent setup or pattern suggesting any further weakness. Now notice here on the DIA, we have already retraced much more of the recent rally than on the Qs or the SPY. If you are trading the broad market or you're trading any big stock like Apple that creates a lot of the energy in the broad market, if you're trading stocks, futures, options, you absolutely must be looking at the broad market and not just the SPY, not just the S&P 500. Looking at all four of these markets together gives you this sort of who wore it better approach. And again, I'm saying this who wore it better thing because I think there was just some sort of film awards and there's all these images of actresses in dresses popping up on my social media. So that's what's on my mind. All right, last but not least on the IWM. So this is the index ETF for small cap stocks. Again, bull bear RSI face off, classic one, definitely warned that the down move might be over. But the thing is, has its bullish power fully unfolded or is there more room to go? Here you can see that this has been a market that's been much weaker than others earlier. It started in November. So I want to look and see, all right, is there a trend line that would be useful here? We're kind of hovering, sort of dancing around this falling trend line. So this is the least weak right now of all the index ETFs. So jumping to the 60-minute time frame on this market, you can see it had a much stronger rally back into the price action from mid-February than the other index ETFs. However, from a momentum point of view, there is an indication that this market may move lower. So it's between these levels right here, and that setup is detailed in the 4 zones RSI coverage system. It is not a bull bear RSI face-off. It's something different. So if you know how to use these elements of price action, right? The candlesticks themselves, the patterns they create, of momentum, so that's my RSI power zones indicator down here, and forecasting, which I teach in loss forecasting, and I'm getting ready to teach even more advanced forecasting. So keep an eye out about that. If you combine these three, you can really be well suited to navigate any twists and turns that come in the market. Again, there were outlook forecasts that I put out in mid-February that despite a war breaking out and global turmoil erupting, were very helpful to my Outlook annual members. So keep that in mind, study your price, time, and momentum trifecta. Remember to subscribe, like, follow, and comment. I'd love to hear more about what you'd like to learn, and I'll catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.